Okay, now going south from Estonia to Latvia, a couple of words about the Latvian benefits. Also not very much too specific related to IT and startup business, but there is something, and these are three topics I have chosen today to tell you about: tax structuring, startups, and share options. And let's start with the first one. If we talk about structuring, then I would mention corporate tax and personal tax structuring as the main issues here. And the corporate tax, I will briefly speak about new Estonian model introduced in Latvia as well for a couple of years already. Then about the holding system, which is already for many years working in Latvia, and about taxation of foreign dividends. And last but not least, I would mention special economic zones and free ports, because I know we have some listeners from Belarus joining here today, and I know that for Belarus businesses, some of the special economic zones are preparing some interesting proposal, and under the law, this main tax benefits for special economic zones are 80% rebate for corporate tax and for real estate tax. So for those owning the real estate and paying corporate tax, it could be quite beneficial to have this, at least consider establishing a company in these zones, where so that you can get the taxation down for corporate tax from 20% to 4%, and from 1.5 for real estate tax down to 0.3, so which is already quite attractive in itself. So let's go to the next slide, Ines, please. And I would mention briefly about this new tax system in Latvia, which is basically copy-paste from Estonia, but still with some deviations. Also, the system works the same way until distribution of profits. There is no corporate tax payable unless you are paying some non-business related costs and maybe are aggressive with your transfer pricing. But regarding interim dividends, they are allowed. No withholding tax on any other passive income, also on royalties and interest. And this corporate tax, 20%, is not a withholding tax. So the same way as in Estonia, this is final tax paid, and there is no additional corporate tax paid on distribution of dividends, in addition to the local domestic tax. In the next slide, I would mention briefly about the holding regime. For those listeners from Latvia, this is very known benefit that basically the main benefit is that if the shares are held for at least 3 years, then capital gains from sale of shares are corporate tax exempt at the level of the Latvian holding company, notwithstanding on the percentage of shares held. So here you can see whether it's 5, 51 or 100% shares held in subsidiaries, the capital gains are tax exempt upon the sale of the shares. And of course, foreign source dividends are in and out exempt from corporate tax. And here I can relate again to the tax system, what Yuval said, that about Israel, where basically the Latvian system, also likewise an Estonian system, supports basically investing into foreign countries, which is more beneficial than investing in your own country, which is very strange for me, at least as a Latvian national, but it works that way because when we invest in a Latvian company pays 20% corporate tax, which effectively turns into 25% like in Estonia because of the 0.8 base increase. But if we are investing in, let's say, Israel, like in this case, then we are getting this low tax rate for large companies. You heard it could be as low as 6%, for IT businesses 7.5 outside Jerusalem or some other centers, and then we are getting dividends in Latvia. In Latvia, you heard there is 5% withholding tax added, but I think we don't need to apply tax treaty here, therefore it could be 4%. So 7.5 plus 4 is still much better than 25% if we are investing in Latvia and getting dividends in return. So from that perspective, the system benefits for these look for these foreign investments. And in the next slide, you can see that actually it works also the same way for natural persons. And this is the reason why for some of the individuals, it's also quite beneficial to become a Latvian tax resident. And I think the system works the same way also in Estonia, where the natural person investing either through the Latvian company or directly in some foreign country is getting dividends in return, and these dividends are tax exempt at the hands of the Latvian natural person if the foreign subsidiary is paying corporate tax on those profits in this foreign country. And for EU companies, we don't even need to look if the foreign company has paid corporate tax in their own country. It's enough that company is registered in EU or European Economic Area country. And for the rest of the world, including Israel, we are looking if the company has paid corporate tax on profits, then the distribution is going to the hands of natural person, and natural person at the hands of natural person, these dividends are tax exempt. So if the natural person invests in this case in Israel, then we might get also much better structure compared to this natural person investing in our own country, which is again strange, but so it is. So if we go to the next slide, then we are a little bit, I would mention also startups, tax benefits for startups, which is a little bit, I would say, unflexible system, which is on the paper it seems very beneficial, but in practice, unlike Israel, Latvia is only starting this to create this startup environment, and therefore this is not working very well. From the statistics, I saw that only 5 companies so far since introduction of this system in 2017 have successfully applied for this beneficial tax treatment of startups, and therefore it's very difficult to do this, and there was a lot of bureaucracy involved. The good news is that we have changes in this startup law, and these are effective for a whole 1 week. So these became effective on 16th of September, and as a result of those changes, the law became a little bit more flexible, and let's see how this will be applied in practice. But it's mostly because of the criteria which companies can qualify for the regime. But the regime itself is, as I said on the paper, it's quite good, so that the company has a possibility to apply for special payroll tax, which is some sort of flat tax regime, where only on 860 euros for salaries of employees of startups. We apply 35% social security rate or this flat tax rate, and there's no personal income tax either on these 860 euros or anything above. So only social security contributions on this part of salary, and that's it. Then if we go above these 860, then there's 10% voluntary social security contribution by the employee. And if we exceed 62,800 salary per year, then there's the same solidarity tax of 25.5% applied on top of those bigger parts of the salaries. So quite beneficial regime, applicable for normally for 12 months. In certain cases of bigger investments up to 2 years. But now under the new changes, there is a possibility to extend this to up to 5 years. So again, more beneficial, more flexible. Let's see how it works in practice. And to my next slide, which is the last one in my Latvia's part, I've mentioned briefly about share options, which basically again is Estonian model, and then working the same way also in many other countries, also including Lithuania, that there is no personal income tax on share acquisition capital gains when you realize share option. So you become owner of the shares, and then you have, of course, either you stay with the shares and pay tax, normal taxes on the dividends received, or you can sell the shares, and then there are capital gains applied, capital gains taxation. But basically the main benefit is to give this benefit to the employees of staying with the company for at least 3 years, and then you already at the beginning can decide, for example, that you give those shares for free, for example, to the employee after working for the company for 3 years, and then employee benefits from increasing the value during those 3 periods and beyond. So their shares become more and more valuable, and this capital gain is not taxed. So, but the caveat is that this system should be registered with the tax authorities in order to apply it. But the good news is that it can be also applied in the group companies, not only the one company in which you are working, probably. So this is also quite beneficial and related to this industry quite a lot, because I see that payroll taxation is the biggest pain currently in IT sector in Latvia. With that, I would stop here for Latvia.